The economy grew slightly at the end of last year as interest rates hurt households. Amazon hits record sales in Australia, and Joe Biden and Donald Trump victors in US primaries. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Thursday, the 7th of March, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you are talking to Carlos Cacho, who is the Chief Economist at Jarden Australia.
I am. Love Carlos. Great man. Tells us all about what yesterday's economic growth figures mean and what it means for interest rates later this year. It's a great chat with Carlos.
It certainly is. And that is the main story this morning. The economy expanded by just 0.2% in the final 3 months of last year, demonstrating really that the run of higher interest rates is sharply slowing the economy, and especially, Sean, in household spending.
Yes, so the outcome was low, but a bit of a relief because it wasn't negative. The annual rate of growth in 2023 was 1.5%. That's the lowest growth rate since 2000 if you ignore the pandemic years. A normal growth rate, if there is such a thing, is probably around that 2.5% to 3% mark, so we're well below that. GDP per capita fell for the third consecutive quarter, with the population growing by 2.4%. 1.5% growth, 2.4% population growth. It means that as individuals, we're actually suffering a recession. The weak spot in the national accounts released by the Bureau of Statistics yesterday was household consumption. While households have upped spending on essential items like electricity, rent, food and health, they've wound back the money they spend on discretionary items, hotels, cafes, cigarettes, cars, clothing, footwear, that type of stuff. Government spending was relatively strong, has been for a while, and is certainly helping the economy. That offsets some of the weakness in consumption. Private business investment was higher. Good news there, but residential investment tumbled. Net exports added to growth. In terms of other good news, labour productivity was higher, though labour costs remain elevated, or something they call labour unit costs remain well above what the Reserve Bank wants, and real household disposable income jumped, as did the savings ratio.
There's always a bit of anticipation, I suppose, around kind of the release of data like this. What was the market reaction, I suppose, to the GDP figures?
Well, equities didn't do too much, but the bond market moved to fully price in a first rate cut in the official cash rate in September, and then another one before Christmas. Now, while economists aren't so sure that rates will fall later this year, investors seem increasingly confident that the interest rate-driven slowdown will be enough to tip the Reserve Bank's hand. Yesterday, Federal Treasurer Jim Chalmers said the upcoming May budget will have to address the sluggish economy. He said even weak growth, as demonstrated yesterday, was welcome growth. Of course, later in the year, we have the tax cuts. They will kick in on the 1st of July. Maybe we'll have rate cuts late in the year. So there is some stimulus coming down the pipeline.
Now, you mentioned that equities didn't react too much to the GDP figures. How did local markets perform overall, though?
The S&P ASX 200 closed up slightly to 7,724 points. It's been a very lacklustre week so far in equities, Michael. I suppose we had a month of earnings season or something and not much happening now.
Needs a breather.
It needs a breather, that's it. The banks were much stronger yesterday, with all four majors finishing at least 1% higher. Toll Road Group Transurban and shopping centre owner Scentre Group also outperformed. All three big miners were lower, so too retailers Wesfarmers, Woolies and Coles. WiseTech was the worst of the large caps, down 2.6%, while QBE Insurance fell more than 2%. Bit of corporate news around. ANZ rose 1% after it agreed to sell a large part of its holding in a Malaysian bank, AmBank. The sale reduces ANZ's shareholding from 21.7% to 5.2%. Magellan Financial Group rallied 8%, the best of the top 200, after total funds management increased to $37.2 billion last month, up from $36.3 billion in January. It did record net outflows of $200 million during the period. Worst on the day was Arcadium Lithium, down nearly 10%. Iris also fell 6% after it was forced to respond to a news article suggesting it was a takeover target. Basically, Iris came out and said it was unaware of any such deal in the offing, and its share price fell back.
What about international markets?
Well, tech stocks were sold off on Wall Street. On Tuesday night, Australian time, AI darling Nvidia's share price rose, of course, but the other six of the magnificent seven tech stocks lost a combined $230 billion in market capitalisation, pushing the Nasdaq index down 2%. They are so big, when they fall just a little bit, it wipes out a lot of money, Michael.
Wow.
Otherwise, Saudi Arabia increased prices of its main oil grade to buyers in Asia from next month after the OPEC Plus group agreed to extend output cuts into the middle of the year. That pushed up the price of crude. Probably not good news for people buying petrol over the next few weeks. Gold hit a record high, helping push up Aussie gold stocks. The price of the precious metal reached US $2,141.79 an ounce. It's benefiting from rising expectations of a rate cut in the US and an associated depreciation of the greenback, and also because gold is a store of value. And given all the geopolitical risk around at the moment, Ukraine, Middle East, China, investors like it. The US dollar is buying 65.2 US cents in Bitcoin, hit another high over the past 24 hours, nearly 69,200 US dollars a unit. Plenty going on. Now, there's something in here which I don't really understand. Maybe I have to go and do some research on this one, Michael.
Go on.
If you have gold at a record high,
Mm-hmm.
you wouldn't really expect Bitcoin to be at a record high, because if you think of the risk spectrum, gold is a store of value. It's a very conservative investment. You take it when times are tough. Mm-hmm. Bitcoin, cryptocurrency, is not a conservative investment. Yeah, so it's just interesting that those two are both at record highs at the same time.
There's a bit of an anomaly maybe. And you know what? This has got written all over it. It's got Weekend Show, Sean.
Well, we've got a guest judge this week, Michael.
Yes, and we'll keep it as a bit of a surprise because Adam Lang, our Fear and Greed colleague, is away. And so we have a special guest judge making a bit of a cameo. So we're quite excited about this.
Yeah, very excited. We'll just wait and tell people later on who that's going to be.
Yeah, indeed. Keep it a bit of a mystery, a bit of a teaser. And just a little shout out as well, Sean, you mentioned Bitcoin, and it is worth a listen to yesterday's interview. If you missed it, John O'Loughlin from Coinbase, who basically talks about kind of Bitcoin's boom and the reasons behind it, is a really interesting conversation. So Bitcoin is obviously in the news. It's been in the news all week. That is a really good explainer as to kind of what is going on. Check that one out. I'll put a link in today's show notes so that you can find that one nice and easily. We'll be back in a moment with the rest of the day's business news. Sean, the federal government is under pressure from the automotive industry and major manufacturers like Thailand to alter recently released new vehicle efficiency standards.
The industry has warned that smaller car brands may, like Holden, quit the Australian market because the economics of selling vehicles doesn't stack up under the emissions proposals. Now, the new standards impose an annual threshold for emissions for all cars sold by a particular manufacturer. Yesterday, the Thai Prime Minister urged Anthony Albanese to slow the rollout. Now, Thailand manufactures about 200,000 cars that find their way into the local market here, mostly utes and SUVs. One of those brands is the top-selling Ford Ranger. Now, Climate and Energy Minister Chris Bowen yesterday, under pressure, said if there are sensible suggestions in keeping with the approach the government has taken, then these emission targets will be reconsidered.
Sean, online retail giant Amazon has pushed through the $3 billion sales barrier in Australia, driven by a broad lift in demand for its retail and media services last year.
Yes, so it's $3 billion for 2023. The subscription service Amazon Prime led the way, and the group is now estimated to account for about 10% of all money spent online shopping in Australia, according to a report in The Australian. Its sales in Australia have almost doubled in the past few years. It takes on established players like the supermarkets, Woolies and Coles, department stores like Kmart and Big W, as well as the other pure online rivals, eBay, Kogan.com, Temple and Webster, etc. Amazon's Australian accounts show its own online store grew revenue by 21% in calendar 2023, while third-party seller revenue increased by 79%. Amazon is easily outpacing the growth of the local online retail sector and is pinching market share from both local and international retailers, becoming a major player here in Australia.
This next one's really interesting, Sean. The share price of online luxury retailer Cettire tumbled 14% yesterday after a report in the Financial Review alleged that duties charged by the company on goods weren't paid to the federal government.
So Cettire definitely sells goods for cheaper. It's a stock that's had a golden run since mid-January, with its share price nearly doubling. The way it doesn't have inventory, it doesn't even have a head office. It actually has people working from home and they flow through the orders and Therefore, they argue that they can actually get products for cheaper. Until the Fin story yesterday, its share price was surging. Fin came out and said, well, it's not paying duty, or alleged it wasn't paying duty. Cettire released a statement saying it believes that all applicable duties and other import charges are paid to the relevant authorities at the point of customs clearance. It pointed out that goods are unable to clear customs unless the duties have been paid. It also argued that the evidence in the Fin article, which is a DHL docket, doesn't mean duties were unpaid. It means that DHL didn't pay the duties, but Cettire itself paid those duties. We're going to hear more about this one way or another.
I thought it was a really interesting story in the Fin and really interesting piece of journalism, because I actually spent a reasonable amount of money on this. I think it was something like $1,300 or something, buying items of clothing through the website in order to test how it all works. It was a really interesting read.
It was very interesting, and the two journalists that did it are very, very good. So that always gives me confidence in these stories. I did like Cettire's response on the article, though. Why the fact that DHL didn't pay the duty, they did. So it'll just be interesting to see where it lands. The share price was down like 30% or something yesterday morning, and then when it came out with the statement, it did come back throughout the day. Anyway, more to hear on that one, I think.
Oh, yeah. Fascinating stuff. Now, Tiger Lily, one of the country's best-known swimwear brands, has fallen into administration for the second time in 4 years.
PKF's Glenn Franklin and Jason Stone were jointly appointed on March 4. Sydney-based private equity firm Crescent Capital last year appointed Deloitte to help sell the business 3 years after it emerged from voluntary administration. Crescent bought Tiger Lily from Billabong back in 2017 for almost $60 million, according to the Fin. It fell into voluntary administration in March 2020, just a few months after an ambitious rebranding. Gone into voluntary administration again. The brand was founded in 2000 by Jodie Mears, the former wife of James Packer. It was later sold to Billabong International.
The British government, Sean, this is pretty incredible, says Australian Super is set to invest £8 billion, the equivalent of about 15.5 billion Aussie dollars, more in the UK, taking its total investment to over £18 billion by the end of the decade.
British Finance Minister Jeremy Hunt said the major investment will promote growth and strengthen the UK's position in financial services, according to Reuters. The announcement comes as the government updates its budget, something that Jeremy Hunt hopes will boost Prime Minister Rishi Sunak's flagging fortunes. His approval rating at the moment is around 20%, the lowest ever for a Conservative Prime Minister. It also highlights that European markets, which have underperformed, are becoming more sought after by Aussie investors. Given the run in Wall Street stocks, many European companies look like good value. For example, the total valuation of the top 40 stocks on the German bourse are worth the same as Nvidia. 40 stocks on the German bourse. Now, Germany's a powerhouse in terms of economies. I think it's the fourth largest in the world. Certainly there are plenty of opportunities there, but investors have just flocked to those big tech stocks. So places like Europe suddenly are becoming more attractive to investors all over the world.
Isn't that just amazing? Now, turning to international news, Sean, Donald Trump has almost swept the Republican primaries over the past 36 hours and is set to be the party's candidate for the general election later in the year.
A triumphant Mr. Trump closed his Super Tuesday speech promising to make America great again. I think we've heard that one, by strengthening the economy and cracking down on migration. The only state he lost yesterday to challenger Nikki Haley was Vermont. After his victory, Mr. Trump said the US had lost credibility on the world stage and his personality had kept the country out of conflict when he was president. He said the US is known as a joke and described it as a third world country because of its migration policy and elections. In the Democrat primaries, Joe Biden swept to victory, except in American Samoa, where an unknown candidate, Jason Palmer, won 51 of the 91 votes cast. We're not talking thousands or millions. We're just talking 51 of 91 votes were cast in American Samoa. And Jason Palmer beat Joe Biden. There you go.
It is clearly kind of Jason Palmer's kind of 15 minutes of fame then, isn't it?
I think so.
Of a sudden, if people Google his name, he's coming up in articles kind of alongside Joe Biden and Donald Trump, and all because of 51 votes.
And also beside Taylor Swift, because she made her first foray into the campaign yesterday. She told her 282 million followers on Instagram to vote in the presidential primaries, but she didn't say who to vote for.
Now, Sean, the battle lines have been drawn now, really. This is kind of it, isn't it? Biden v. Trump is how it's going to play out. The big question, I suppose, is whether Donald Trump can reverse his defeat of 4 years ago.
According to the polls, it's a very close-run thing, with the Wall Street Journal saying 47% of the electorate back Trump and 45% pick Biden. That's pretty much even Stevens, given margins of error and the number of months before the poll. An improving economy is definitely helping Biden somewhat, but more voters seem to be turning their attention to things like migration, which, of course, Donald Trump is very vocal on. It's going to be, well, I don't know if I'm going to say fun. I mean, as a journalist, it's a fun 8 months in the run-up to the US poll, but certainly interesting.
Dramatic. This last story, Sean, one of the world's most iconic photos of a sailor kissing a woman in New York's Times Square on VJ Day at the end of World War II has been caught up in a fight over consent.
Yes, you know the photo, Michael? The sailor holding the stranger who's leaning backwards?
Oh, yeah. Very, very, very famous. Iconic is the right word.
Yeah, it appeared in Life magazine. It's certainly one of the world's best-known snaps. It's a beautiful photo because it just captures the excitement of that moment. But the US Veteran Affairs requested the photo's removal from all its health facilities because it depicts a non-consensual act and is inconsistent with the department's sexual harassment policy. Eventually, Veteran Affairs Secretary Dennis McDonough stepped in and said the photo wouldn't be banned. Now, the photo was taken on August 14, 1945, known as VJ Day, the day Japan surrendered to the United States, as people spilled into the New York City streets from restaurants, bars and movie theatres, celebrating the news, according to Associated Press. George Mendonça spotted Greta Friedman, spun her around and planted a smacker on her. The two had never met. Now, Friedman died in 2016 at age 92. Mendonça died in 2019 at age 95. Beautiful story. But I think perhaps the political correctness police just went a little bit too far on this one.
Yeah, that's a remarkable story. Now, up next is the Fear and Greed daily interview. Carlos Cacho, chief economist at Jarden Australia, is your guest today, Sean.
All about yesterday's GDP figures, what they actually mean, and probably more importantly, what's it suggest for the rest of this year in terms of how the economy will fare and what will happen to interest rates.
It is next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 7th of March, 2024. Make sure you're following the podcast and join us online on LinkedIn, TikTok, Instagram, X and Facebook. I'm Michael Thompson. That was Fear and Greed Business News. Have a great day.